Okay, Jack. So,
Okay.
very, very nice to meet you, Jack. Your reputation precedes yourself in here. A lot of people are excited. They've read your books, Market Wizards. That's what you're really known for. But what I like to do in these interviews is I like to start from the beginning of the journey. How did it start for you?
I began in the business really as a research assistant and then research director in futures, uh, and that exposure to markets led me to trading my own account, which led to the idea that hey, doing a book, interviewing, doing a book on interviewing great traders would be a great way to meet these people and pick their brains, and see what they're
Right.
doing right and I'm doing wrong,
Okay,
so to
so you
speak.
took my first question away. I thought that may have been the main motivation was not that you were out looking to write a book. You were out looking to become a better trader, and why not interview the legends to find out what methods and how you could model yourself based upon their success, correct?
Yeah, that was the origin idea. Although I had done an analytical book, a very comprehensive analytical book on the futures markets years before, and that acted actually as a catalyst for a publisher getting me to do this book. But the idea came not from the idea of, oh, here's a way to write another book, but more, gee, this would be a fun project and a good way to meet these
Well,
people.
traders are come from all different stripes and cloths, Jack. Different demeanors, personalities. You've interviewed these legends. Which one stood out to you? Were you most impressed by their presence and was a great influence on you in your trading career? Which one's your favorite?
Well, since I never really, to be clear, I mean, I went on to do a lot of things, but I was never a full time trader. And the period I was more involved in trading and managing money was really systematic, and then it might have been the influence. It's hard to say because I interviewed a number of systematic
It's
traders.
like saying, "What's
Um,
your favorite kid?" Right?
Yeah, it's a bit like that. It's a bit like that. I do remember, though, one interview as far as going to systematic trading, which I eventually went back to discretionary trading. But the influence to go to systematic trading, I remember that when I interviewed Tom Basso, he was telling me about this morning where there was some. I forget what the news item was. It might have been one of the Iraq wars or whatever. But whatever the news item was, the market had, yeah, I think it was that. And the market, he went to sleep, he was long crude, and the market had been up like very, very sharply. And when he woke up, it was down like, some enormous amount. And he almost thought he heard it wrong on the radio, when he was listening to the news, and it turned out it wasn't wrong, and he had lost a tremendous amount of money. And when I asked him how he felt about it, he said, "Well, he just went in, he executed everything the way he was supposed to, and it was all done in the first half hour, and he was just satisfied that he had followed his plan, even though he had lost a lot of money." And that composure and that sort of lack of emotionalism and the stress sort of impressed me, and I think that was one thing that made an impression about, well, hey, systematic trading is probably a good way to get emotionalism
Yeah,
out of trading.
interesting that you bring up what impressed you was not days of great performance, but how traders handled adversity. I know when I was looking and raising money for CTAs, what was important to me was not their best quarter, but their worst drawdown.
Right. That's I always focus. I always focus more when when I am in the allocator role. Well, I would say focus more. I would focus equally on return to risk. I don't separate them. I consider them what linked at the hip joint, so to speak, and then you can only measure one versus the other. So somebody's return only has meaning insofar as what the risk is that they took to get there.
I wanted to ask you about something that I found so interesting is that you write in your books that all of these great traders knew when to break their rules. Can you expound on that?
Um, well, in some cases, of course, when you come to systematic traders, you don't really want to
Right.
break the rules, unless you really believe that something is wrong with the system. And then you have people like, I can think people like Thorpe, who is one of the greatest, maybe one of the greatest track records of all time, and many, many years of managing money across two hedge funds. But in this case, he would develop a methodology. He'd be the first one to say do stat arb, and then other people started doing it, and he refined the methodology so it would be hedging by sector instead of market, and it again became better, and then more people started doing it, and then he would refine it to be using mathematical factors, and he kept on evolving it so as needed. So I guess that way that's true. And of course, discretionary traders know enough when to change or to stop trading. So I guess that's along the same line as well.
Let me ask you this. So why your shift from systematic back to discretionary?
Basically, that was just a personal, because, well, I guess I could say it this way. Because it's possible to do discretionary and still have the same lack of emotionalism or risk control as you do systematic. It's just a matter of building that into your approach. So if, for example, you never put on a trade without having a stop of where you're getting out, well, you've kind of achieved the same type of systematic thing to it. Now, you haven't systematized the entry level, but the stress in trading, I find, comes not from entering, but in getting out. Yes. And if you can take the stress out of the liquidation decision, then you can get a lot of the benefits of systematic trading into a discretionary approach.
You interviewed Paul Tudor Jones, correct? Okay.
Yes, I did.
One of his statements is, all the big money is made at the turns. Do you ascribe to that?
I think that may be true for him. It's certainly not true for most traders. And one thing that I certainly learned was that all these traders have different approaches. And you know, what one trader might be doing might be very, very different, if not almost the opposite of what other traders are doing. So there are lots of traders who will never even think of trying to get the turn and the capturing the first big move. That's not at all what they want to do. So it may have been true for Paul, but I don't think it's true as a generalization.
Okay, that's interesting. So, you know, most of the great traders, including people like Rich Dennis, were trend followers, and we classified Paul Tudor Jones as maybe a reversal type trader looking for turning points in the market, which is,
among other things. I think he did a lot of things, and he might have been looking for, you know, that might have been one thing that he did, or try to probe for turns. But I think it was much broader than that, than what he did. And of course, anybody who uses trend following, by definition, would not be doing that, and would be looking to capture the middle part of a trade. The trend followers, by the way, I wouldn't say had the some of the early ones like Ed Sakota. And when I say early, I mean very early.
When we were updating our charts by hand, you're still a young man. You're younger than me, but I used to carry around the commodity perspective. It would have coffee stains on it.
Yeah. Well, in those days, and Sakota is my contemporary, maybe even a couple of years older, I remember when I interviewed him, and this is now 25 years ago. He unrolled this graph paper, which was like taped together, one piece after another. It's like a parchment scroll, and it was his equity, and goes all the way back to when he started with I think it was $5,000 or $10,000, and progresses over the years.
It was like the Dead Sea Scrolls, huh, Jack?
Yeah, well, except that except it was a picture instead of words and symbols. So it was just his equity curve with these big roller coaster ups and downs, but starting from a very small sum to 10,000 and going up to many, many millions and tens of millions eventually after, at some point. But that type of performance, those were the very early trend followers that might have achieved that, but never again, and certainly never, and I think it will never again be achieved, because it was only those people who were very early on to using this, and when markets were having big trends, and before there was a lot of competition for the approach. Those early innovators were the ones who made these phenomenal returns. But for people coming in today, I think trend following is an approach that can work and provide reasonable return to risk, but with fair volatility. But it is no longer the same game it used to be.
Open outcry is gone. When I went back to Chicago last year, I went to the exchange, and there weren't even locals in the futures pit. They were all in the options pit, Jack. So would you say that the shift to electronic trading has taken away some of the pure technical analysis edge that people had before it?
I would say it's not so much the electronic trading in part, but it's really more the whole computer revolution and the just explosion of power, of computing power, which makes possible all sorts of very complex strategies which were impossible to develop or let alone implement, and has brought in sort of scores or hundreds or thousands of maybe even thousands is maybe tens of thousands is more, it might be more accurate, of high level quants, mathematicians, physicists, so forth, coming up with these methodologies that just weren't impossible there, and extracting money from the market. So I think the competition now is much stronger than it was back in those early days.
Okay, Jack, I'd like to shift gears a little bit. We still have a tremendous bull run up until recently in equities. What's your view on what the Fed has done over the last 4 or 5 years and the possibility of them unwinding this and the central bank's effect in the markets?
Okay.
What's your take on where we are and where we're going with that?
So the statistician in me, not that I'm a statistician, but as an economist, I've exposed to statistics, says you don't answer any questions where you don't have sufficient data. And when you have a data point of 1, with no, you really don't have the precedents, you don't have the data to really answer that question. I think I will say this. I think and again here, there's again not enough data, but in as much data as you have, and the only comparison you can go to that's remotely close is really the crash. If you look at what was happening in the economy and everything else, and the speed at which jobs were being lost, and the types of financial lockups that we were getting, it was really might have even been even worse than it was in the pre-depression. The events that led to depression.
Bubble.
So it was a bigger bubble, but the crash was every bit as fierce, and the financial crisis was probably as severe, maybe more severe at that moment. I'm talking the September, October, November 2008 period. And the fact that here we are 5 years later talking about it calmly, there was no depression, there was no great crisis. In fact, things have been reasonably okay. So you have to think whatever was done was probably, we don't know the alternative scenario. We'll never know. You can't play history over. But if I was a betting man, or if God would show me the hand, okay, here's what would have happened if this wasn't done, I would certainly put my money that we would have been a lot worse off if things were done differently. I think we got out of this as well as we could. Now we still have the problems out there. How do you unwind and all of that? And I don't know how that's going to play out. But so far, I would say that the actions that were taken worked out a lot better than I think myself or most people would have thought possible.
And I am going to put you on the spot. You're looking for a continuation of the trend in equities. What asset classes are you beamed in on for 2014?
I'm gonna dodge it, not because I'm trying to dodge the question, because I just don't consider myself a prognosticator when it comes to markets. Or anything for that matter. So I just, I sometimes I have a strong opinion. I'll give you that caveat, and I'll tell you my opinion. But frankly, right now, my only opinion is the market just doesn't look like it's finished on the upside. But I think it's getting at some point. This has been a very extended move. When we started, the market had been really underperformed. One thing I do look at, and I put in one of my books, market sense and nonsense, is this pattern where if you have periods of 5, 10, 15 years where the market has really underperformed, then the next 5, 10, 15 years tend to be really good. So back in 2009, 2010, that type of approach would have told you, that, boy, we're really, well, the market has a good chance for doing very well. Now, after these last 5 years, that has totally changed. So I think it's a lot less constructive than it was in that respect. And but I don't have a strong opinion right now.
I'd like to talk about Fund Seeder. Do you want to share your
Sure.
screen? Remember we went over that?
Oh, you don't. Tell me.
Okay, you just scroll down
Tell
to
me
the bottom of the
what.
Skype page. You click
Yep,
the
I'm there.
plus sign, and then you
The
click
plus
share
sign.
screen.
That's where it's hidden. I look for share
So
screen.
what's
Here
the
we
mission
go.
of Fund Seeder? I've been putting out tweets that you're looking for potential new wizards. Can you tell us about
Yeah,
this
exactly.
project?
So let me actually go to. Let me pull up the site here.
It's kind of like show business, Jack. You're looking for undiscovered talent.
Yeah. So the idea here's the idea. Basically, you've got this world is global, and I'm talking about U.S. I'm talking globally.
Right.
You've got hundreds of thousands, you got millions of traders out there, but in those many millions or tens of millions of traders, how many traders are worldwide? There's some, even if whatever small percentage you take, there's a large number of people who are probably pretty good. But they're small. They have no access to money. They don't have the right connections, but they can
see
trade.
it every day in our
And
community, Jack. Every day.
Right. Okay. So how do these traders who actually have developed trading skill, however they've done it, people find it, and I know when I did my books, a lot of people I interviewed were people completely unknown. I know these people are out there, but how do you get those people to be able to get assets? On the other hand, you have people who have the money out there, fund seeder, people who would like to fund the next market wizard. They have the assets. If you could show them the proof, they'd be willing to put the money in. So fund seeder is the liaison between those two groups. And the idea is that fund seeder the traders would sign up. They would link up their accounts through Fund Seeder. Fund Seeder would verify the performance via the brokerage, not the trader. So it's not like the trader goes on and you post your returns and take it on faith, because we all know that there's a lot of people out there who will tell you all sorts of things and show you all sorts of returns that are a product of a vivid imagination. But here is a way where the actual performance gets filtered through the broker, not through the trader. So on the investor side, he knows or she knows that there's real results there, and then investors can allocate money. There's ways the site will permit searches for traders along with different criteria, and they can find people they want to allocate to.
Can you click the share screen so we could see it?
Yeah. I'm sorry. Isn't the screen on? I'm sorry.
You have to click the plus sign and then share screen.
Oh, I thought I did. I thought I did
Jack.
that. Shows you what a novice I
Here it
am. But
No, now
you got it?
You have to click the plus sign and
Okay.
then the screen share.
So
So if
go back to Skype here.
people qualify after a period of time, is it set up like a prop trading firm where they'll receive a percentage of profits for the money under management?
Yeah, basically, the trader and the allocator would negotiate. There would be a negotiated term. Typically, it would be a managed account, but it could be contemplated. It could also be structured as a potential fund that would allow outside investors in as well. So the main point of the site is really to connect the two parties, and there would be there's no defined investment terms. Those would be negotiated between the allocator and the trader. Of course, there would be a contractual obligation for Fund Seeder to participate in some way, obviously, because that's our role. Now, I should say that Fund Seeder right now, if you go on to fundseeder.com,
Jack.
I'm. You know what? I keep on getting this.
It's because you called
I try to
me
hit
instead
Skype.
of me calling you. So we won't be able to show it, but I'll post the website.
Okay, so Bottom line, so right now it's a landing site, and there'll be an animated clip that'll explain how it works, and traders can sign up and be notified as the next steps are taken. But eventually the technology will be there to do exactly what I described, which is basically allow the traders to link their brokerage account, have the results verified in real time. And also for those traders, because real time is a little slow, there are traders out there with track records, and it's much more effective to have a longer-term track record. But that, of course, we can attest to in real time before the site begins operation. So we have the facility there. One of our partners is a firm that does the compliance and auditing and so forth. And for traders who want to go that route, we can internally audit their track records at a in-house cost, and therefore investors who go on would be able to see a past track record that has been audited.
Okay, well, it's an exciting concept, and there are a lot of people out there that have trading skills, but you're right, not access to capital. So I encourage everyone hearing us that feel that they're consistent traders that have evidence to bring to Jack to get in touch with him through FundSeeder. Jack, are you paying attention to what's happening in the Ukraine? To me, I know you're not a market forecaster, but to me it seems like a significant event, and a lot of people are hoping that it's just a one-off and Putin will back off. To me, it looks like opening day of a baseball season, and there are many games ahead.
Yeah, I think, well, I do follow politics and economics, so sure, I'm following it. I'll give you my 2 cents worth what I think will happen. And I guess my 2 cents are probably as good as most of the talking heads on TV. But what I basically think is because and someone said, I don't know whose line it was. I'm trying to remember now. Somebody had a good line, but it was along. The thought was that when Russia back in invaded. I forget which country, because they invaded a number that might have been when they went to Czechoslovakia, whichever one they did. But whatever one it was. The stock market, they didn't have to worry about the stock market reacting because they had no stock market.
Yes. Now they actually see the financial repercussions of their actions.
So now they're tied into the world economy, and so if they that really holds them back, I think, more than anything else. Certainly there would be no military blockage, and nor should there be. I mean, I think people who are criticizing Obama for not more of a response, I'm not quite sure what I'm sure that if you sent troops in, they would have been complaining that why are we getting involved in this? So I don't think there is a military solution here. But what I think is that that Russia, Freudian slip there. I think that Russia will, for economic reasons, not push this thing too far. I think they want Crimea because of that access, the naval access, right, which is I think they consider militarily critical, and they'll probably hold on to that. They wouldn't have bothered doing this, I think, if they weren't planning to hold on to that. They'll hold on to that. Whether they actually they annex it or have some sort of control, but one way or another, they will hold on to that. I kind of don't think that they'll necessarily push beyond there because they have more to lose economically than to gain militarily.
I'd like to wrap it with the dollar. We vacillate between the dollar is doomed and it's going to lose its reserve currency status to the euro is going to implode, and it's a failed experiment. Any view on the dollar? It's been mainly range bound for the last year or so.
It's a relative. It's right. Dollar is relative to everything else. It's not a matter of judging what do you think of the dollar. You could still do okay if you're the least ugly of the lot sometimes.
I'm hearing a lot of that, and possibly that's the reason behind a blow off in U.S. equities, as flight capital looks like the U.S. is the best place and the furthest away from a lot of these hot spots on the globe. Is that possible?
Well, to some extent. And you certainly see some currencies where you had, I mean, of course, in some cases, currencies have already deep into moves losing against the dollar, like the yen. I mean, but that move has already gone an enormous way. And you have others like Canadian dollar, Australian dollar. So you have a number of you have a number of entrenched trends in which the dollar is gaining versus other currencies.
Okay,
So.
well, Jack, you know, it was great to meet you and talk to you, and I encourage people that believe they have the right stuff to go to Funseeder. You can follow Jack at Jack Schwager. His books are classics. Thank you so much for your time, Jack. I know you have a television interview to make. It was
Right.
really nice to meet you, and hope that we could carry on this conversation down the road.
Sure.
You're very
Thanks, Dale.
welcome.
Bye.